Okay. Welcome, everyone. Honored to introduce to you the 2023 Italian Symposium. It is our first edition, and I'm really honored to present this to you. I must say I'm quite excited, given the lineup of guests we will have for the next few days. And I can see the excitement also among our people. I must say, we received the really positive feedback, and thank you very much for everything, for the support you've given us. I would like to thank everyone that supported this event, that was behind the organization of this event. In particular, Fabio, Maria, and Nicola Bambini were the co-founders together with me in organizing all of this live, as well as the Italian Society Committee and the United Italian Society Committee. I believe this symposium is an opportunity for everyone, for our generation as well as the older generations, to learn and to engage in a dialogue between generations. And in a sense, also, here we have the last guest, okay? And also, like, our aim is to harmonize discussion and, let's say, inspire the next generation in terms of careers, but as well as in terms of what we can learn from expertise and top-level people in their sectors. This event is brought to you by United Italian Societies. We got the LNC to Italian Society. And I must be quite excited for the journey that we've had so far. United Italian Society has been founded 1 year ago. And now we've grown to 20 societies around the UK, from Edinburgh to Southampton. And we can offer our programs and events to a community of over 4,000 students. So I'm quite proud of that. And I would like to lastly thank the sponsor for being here, for supporting this event. In particular, SDG Group and the Luzzo International Partners for being a strategic sponsor, as well Casa Londra, Miami, and Macron for supporting us with sponsorship. So without further ado, I leave the word to Dr. Martelli, who's going to present to you the first guest of our first panel. And thank you very much for the speakers and everyone who's supporting this event.
Thank you very much. So good afternoon, everyone. I am Angelo Martelli. I'm an assistant professor in European and International Political Economy here at the LSE. Thank you very much, Umberto, and to all the other teams of the other members of the Italian Society team. I think it's a great lineup you have put together in these few days, and I know how much effort it goes into it. I also have to start with an apology. I told Umberto, we were discussing this. We are all white males in the panel, and I'm very sorry, but the good thing is that the last panel today instead will be all female. So at least we are trying to balance across the day.
We've tried as much as possible to balance it out. That's what came out, and I apologize. So, a disclaimer at the beginning of the event. We've really tried. The number of invitations was equal.
So I hope that you will forgive us for this. But moving on, I would like to start by introducing our guests today. We're very honored to have with us, starting with the first guest on my left, Fabio Gallia, who is Senior Advisor at Centerview Partners, a leading independent investment banking advisory firm. Since the autumn 2018, is the founder and CEO of Simple Equity Partners, a financial advisory firm supporting entrepreneurs and international investors in M&A and investment deals. But he was also, for a long time, back in Italy from 2020 to 2022 as the general manager of Fincantieri. Between 2015 and 18, he held the position of Chief Executive Officer and General Manager of Cassa Depositi and Prestiti, and has also held a number of other important posts, including Chief Executive Officer and General Manager of BNL BNP Paribas Group. We move then to Mauro Moretti, who is the founder and managing partner of Three Hills Capital Partners, Prior to establishing the company, Mauro was a partner at Hutton Collins, where he worked on several investments. Earlier in his career, he worked at BC Partners, both in Milan and London, and the M&A division of JP Morgan. Mr. Moretti is the founder, chairman of Nice to Meet You Foundation, a not-for-profit organization focused on promoting education through scholarships, research, and projects to guarantee the same opportunities for everyone and enhance their possibilities for change. And finally, Filippo Taddei, who has just joined us. He's the chief economist for Southern Europe, as well as on European economic policy at Goldman Sachs. Until 2020, he was actually back in academia. He was an associate professor of international economics at the European campus in Bologna of the School of Advanced International Studies at Johns Hopkins University and director of the Bologna Institute for Policy Research. And from 2013 to 2017, he was the national head of economics and labor for the Democratic Party. I thought it would be to give justice to the guests and to the audience to introduce their bios a bit more in a lengthy way. So the topic of this today's panel is investing in Italy strategies for attracting new capital. And according to data from the OECD, FDI inflows in OECD countries in 2021 returned to their pre-pandemic levels from 2013 to 2019. Additionally, there was a further increase in FDI flows in Q1 of 2022, with a 21% increase compared to Q1 of 2021. So in a recent blog post by one of my colleagues here at the LSE, Riccardo Crescenzi, with another co-author, they state that Italy has been seen a significant increase in inward FDI since 2021, surpassing other European economies. And you can see also an increased number of M&As, but also influx of venture capital and private equity. So here we are trying to put these into context and really try to understand how much of this is a sign of hope for Italy. And in particular, I would start by encouraging the guests in a way to share a bit their experience when investing in Italy. And in particular, we see that Italy is still below other countries such as Germany and France in terms of FDI. In 2021, Italy actually recorded about 1/7 of FDI than France produced. So why do you think this is the case? Is this because of a lot of attractiveness for the country or a lack of, in a way, investment opportunities on the ground? And I will start by, I don't know if Fabio would like to take the floor.
Right. Thank you for the question. Let me congratulate Umberto and his team for organizing symposium. I think it's a very important day. And so going back to your question, I would probably start by saying that foreign direct investments are really important for any country. It's not just about financial impact, employment, but it's about also some soft element, which is about trust. Investors, countries are putting their money, their people, their minds, their time in the country. And trust is very important. That means skill, know-how. That means indirect impact. For example, in many areas of Italy, even the southern regions, when a joint venture between an Italian and French company, STM, invested in close to the Etna volcano, for those who are not familiar with the Sicily, not necessarily the most friendly environment, but it became a great success story, even in terms of skills, which has been created. Therefore, FDI is just not about numbers. It's about the impact they have. And before going to Italy, let me see my view about what moves big investments. Investments are made by large corporations. That's the main focus. Then we have many large corporations which are state-owned. Look at China, for example. But if you look at the most of the investment, they are private. And for example, they look at the dimension of the markets, clients, dimension and dynamics, demographics. They look if they have natural resources. They look if they have skilled labor. They try to look if there is cheap labor as well, which can compensate with lack of skills. Think about this. You have the valley, Silicon Valley. What is the value for a country like US in terms of attracting investments, which means, again, it's a soft part, which means probably even more important than just the numbers. What is the value of having the largest and deepest and most diversified financial markets? Okay, Europe has to compete with these guys. Do we have natural resources? No. Maybe we'd be lucky because transition we have with sun and wind. But then we need authorization. Otherwise, this part remains on paper, but I will come back later on this. How about demographics? Worst demographics in the world, Japanese, German, and Italians. French much better because of policies. How about financial markets? We're talking probably in the last 10 years since Lehman crisis about the capital market union. We're far from having unionized and cohesive markets. Let's talk about technology. Something is moving, but clearly we're lagging behind. And I say so because just looking at Europe, to me, captures part of the equation. The world now is a competition between US and China. And we're in the middle. And we're in the middle. In US, you got 3 large telecom companies. In Europe, we have 90. And I could continue, but I've been working, you mentioned before, in the shipyard business. Frigates for all the military system for the Navy, they got maybe 7, 8 platforms. We got 30. And I could continue to make examples. So it's important to me that when we talk about FDI, there is a European issue versus what is the emerging world, which is the one emerging, already emerged in the last few years. So we have to keep that into consideration. So let's come to Italy. The most recurring question or answer, depending on who I was talking to, but the most recurring issue which has been raised regarding the difficulties in investing in Italy is justice. Timing, certainty of the law, we call it rule of law, and simplicity and speed. Timing of having. So why do you say so? Because I think in the end, and I go back to what I said before, I forgot to say US, a pro-business environment versus what we have somewhere else. So I think it's important that we need justice, which overall works better. And that has been said by manufacturing companies, business service companies, banks, and bankers. So this is really the most recurring in my, I would say, 20 years of experience as a business leader. I think it's a matter of having a pro-business environment, which goes beyond. It's about having infrastructures and basically trying to capture those flows, which is not just about the number of projects, but the quality of these very projects. Because one thing is having low added value projects versus when you have to deal with certain know-how, skills, knowledges. I think it's a competition among European countries to try to capture the most important projects of the country. And I see that Italy clearly is getting out better after the pandemic, but clearly it's lagging behind. I continue to believe that it could lag behind also because, first of all, we're talking about larger economies. So the number normally larger economy means that people tend to go where there is more market requirement. We don't have cheap labor yet, so that doesn't change the equation. So we really have to work on these 4 or 5 key structural issues in which I think we improved, definitely, but there's still room to be done in a competitive environment. And third, southern regions represent more or less, if I remember correctly, between the 5th and the 4th of our GDP. FDI, the last few research which has been pointed out, is less than 10%. So we should probably correct this and looking just center north or northern country where you don't see these kind of, let's say, put it differently, doubts for selecting one of these regions are less intense than investing in southern region. I'm just saying that to me, southern regions itself is a great opportunity for the country, but we have to tackle. So I think that we have to solve some of these issues. That will take years because there will always be some kind of way of thinking about our typical characteristics, and that will take time, even though some of the reforms which has been put in place in the last 7-6 years, I think they're going to help us. So I'm positive long term, but really we have to remember we're competing versus France, which is terrific. They have a system which we do not have. So they have a public administration which works normally much better than ours. So it's a tough competition. You got Germany, you got Spain. Even in tech, we're discussing before, they're doing much better than Italy, Spain, but not France or Israel. So it takes a while, but we have to consider that Europe had to live not just looking at Brussels, had to live looking at Washington, San Francisco, Shenzhen, and all the other. Shenzhen is the tech capital in China, and what's going on, because this is really, to me, one of the key themes of the next probably couple of decades.
Thank you very much, Fabio. We'll actually go back to the role that the government can play in attracting these new investments or attracting it further. Mauro, I yield the floor to you to tell us a bit with broad brushes. What's your view? Is that?
So I think connecting to what Fabio mentioned, I will start with some positive notes. So I uplift a bit the morale, and then I will probably echo some of the issues that we need to work on together. And of course, government will have a key role on it. So the positive news of around investing in Italy. So first of all, it's very good to be Italian to invest in Italy, in the sense that actually creates a bit of a competitive advantage, because Europe is a federation of very different countries, and that's why in many sectors you have 3 or 4 players per country, and that's why the consolidated players are actually much smaller than in America, as Fabio was saying. But Italy is even worse, because actually every region is very different, and also to invest in something, at the end of the day, you're investing on people. And the culture of someone in Veneto, it's very different from the culture of someone in Verona, even from the language. And so I think one of the barriers to investing in Italy, it's actually language. And a lot of entrepreneurs still don't speak English. And even when the entrepreneur speaks English, when you go down through the middle management, you struggle. And so for me, as a selfish perspective, I've always, let's say, enjoyed and focused our fund to have Italy as one of the key countries. And in fact, in every fund probably accounts around 30%, which is a lot. We invest across Europe, and most of my competitors probably would have 10, maximum 15%. In Italy, I have doubled. But because being me the founder and being Italian, we have an edge there. The second element connected to that, it's the focus of investors on scalability. And that's one topic that Fabio mentioned, but it's key. It's also key to understand why venture capital, although numbers are a bit better, still in Italy is much behind France or Germany. In Italy, we have several industries where you really struggle to find market leaders with 5 or 10 billion revenues. Why? Mostly because the local market is small. As I said, the culture of businesses is not very, let's say, international expansion driven. In the last 10 years, I spend most of my time when I go in Italy, sitting down with entrepreneurs and I convince them to go abroad. Because actually, from a technology and talent perspective, Italian entrepreneurs are genius. Are genius because, first of all, there is a creativity element in the DNA of our country, which you can see from packaging to production of nylon, aerospace. It's not just fashion. We of course see on the news Moncler and Ferrari, but actually when you go especially in the B2B, we are the excellence of Europe. I can tell you, we invest everywhere in Europe. There is nowhere, no France, no Spain, no Germany, where we see the excellence of finding solutions. Now, this, let's say, genius has come out and has become as such Also because doing business in Italy is very tough. The bureaucracy is very tough. The cost of energy is very tough. Finding talent skilled and that speaks English is very tough. So the entrepreneurs that make it in Italy, as I call them, the superheroes. You know, if they make it there, they can make it everywhere, as the Sinatra song would say. But you need to go there and convince them to go abroad, because locally there are very few investors. So if you look at, for instance, private equity, which is what I do, very few private equity players in Italy have an office abroad. So they struggle to become the partners of these entrepreneurs to say, okay, let's go in UK and buy a business, or let's go in America and buy a business. So scalability is a big issue. Third element, which I think it's a very important one, it's connected to the perception of what does it mean to be an entrepreneur and what does it mean to do business. A pro-business environment, as Fabio has called it, it's not only a country which see someone doing corporate and new businesses as someone that actually is putting a lot of his life at risk. But by definition, if you do a business, you can also fail. If you don't do, you don't fail, by definition. No risk, no return. And unfortunately, if by accident you end up not doing well in your business in UK or in America, you have procedures like administrations here in UK, pre-packs, Chapter 11, are actually also nice words. If you hear the words, are not scary words. Pre-pack sounds like a packaging thing, or Chapter 11, it's even like something, academically, intriguing. In Italy, you are a fallito. I mean, you're dead. You have tried to make it instead of actually get a job with the government forever, thanks to some political association, or instead of getting stuck in a desk in your business and never leaving, you actually take the risk with no salary, because most entrepreneurs start with no salary. They actually need to provide salary to the people that go with them. And if you don't make it, you cannot even leave the door of the house. In the village, they will say that you have been bankrupt. Banks will never lend you money for the next 20 years. The approach to failure is a big problem. And I think it's something very unspoken and untold. But actually, funny enough, last week I was with the current chairman of Borsa Italiana, and she is writing a paper or a book around celebration of failure, because she's from Linklaters, which is a big law firm all around the world, and she agrees with the same reading that I have, that we need to change. We need to change that, because that is also what stops a lot of young people like you to go out and try to make it. I talked about myself. I started my business, I was 29, but I was in London. I was up and running in a month. 3 months after, I actually received a check from Inland Revenue, because they were giving me money back because I bought some computers as a VAT. And I went to the guy that started the business with me, is a Dutch person, very serious. And I said to him, I think this is a mistake. They sent us back money from the Inland Revenue. This is impossible. I'm Italian, I can tell you. Inland Revenue only takes you money from you. They don't give you. And he said, no, this is absolutely right. I made the application 7 days ago about the computers we bought, and the check, 7 days before. And the check was in our, you understand, from a startup, I'm telling you, when I actually realized that £7,000 were mine, it made my month, and it gave me the push to keep trying to stay in business and make it, because the first year or 2 or 3 that you're an entrepreneur, it's tough. You have a lot of problems. You sometimes don't know how to pay the salaries at the end of the month. So this is all, let's say, relevant for what, being attractive means. But we will come back to some of them later.
Thank you very much, Mauro. Filippo, can I add one question to the one I just asked? Because they both Mauro and Fabio were talking about scalability and size mattering, okay? And they were referring back to the US where you actually have few big players dominating the market. But this has also been pointed out as a problem sometimes for competition, right? Because you have big players that might actually stifle in a way competition for the market, drive up prices, markup. So I'm bringing the academic back in you because there is an NYU professor, Thomas Filippo, that has written this great book, The Great Reversal, how Europe, how the US actually gave up on free markets to some extent, favoring monopolies and favoring certain big tech from taking place. But it seems that scalability still matters, right? We still need, like the Italian saying of il piccolo è bello or something similar, it doesn't really apply when you want to attract capital, right? You need to internationalize, you need to be able to scale up. So how do you, in a way, reconcile this view of competition still needing to be there, but being able to scale up? And I don't know, you have much more of a macro view on this, so please.
It's on. Thank you. So thank you. So let me start with super happy to take your question. Let me start with an apology to the other panelists and to you for coming late. Apologizing is not a great way to start a conversation, but you know, in this time, I'm afraid it's due. So to your point, I think the concern for lack of competition in Italy is so further out that we have to think about first thing first. So there are really 3 points that I would like to add to what the other panelists have mentioned now. You know, number one is why Italy is special, why Italy is more in need of investment in general, I would say, and in particular foreign direct investment. What's the issue? So why are we concerned about this? What are investors looking for? And it's something very easy at the end of the day. And finally, you know, because I like to close on a little bit of on an upside note, why we have an extra opportunity maybe to address this structural problem. I mean, the size, lack of innovation, lack of investment. This is an evergreen issue for the conversation regarding the Italian economy. Evergreen means that my generation, I'm in my 40s now, has essentially been the first generation lucky enough to be characterized by a continuous discussion regarding lack of productivity in Italy, which, by the way, is kind of an historical exception, but we've been lucky enough to be first there in that conversation. So, why Italy is in more needs? Because Italy is in a very special country where, as it was pointed out before, the demographics is horrible. We are among the 3 countries with the worst demographic. Productivity is lagging behind, and actually, the best way to characterize productivity lags in Italy is actually by there's a wonderful, you know, very not technical paper that actually a former professor at LSE, now is a Bocconi, Gianmarco Taviano, with co-author made in the past. And the point he was making really was that when we think about productivity in Italy, the problem is not really the level of investment, but how misallocated investment is. So essentially it means investment goes to the wrong places. So now, if you break, I mean, it's an average statement, okay? So it doesn't mean that there are no productive investment in Italy. It just means that Italy is worse than other places at allocating capital. So now how you break this problem, and you typically break it into ways, either you change the incentives domestically, which is great, which is happening to some extent. Maybe the reforms we've been talking about and partly implemented in the past will be fitting in. But another way to break it is that you come from outside. If you come from outside, you're less, how can I put it? You're less constrained by the current equilibrium. So you can break the allocation, you can actually improve the allocation and make it more productive. So that is actually the reason why it's not just a matter of levels. It's not that Italy receives less FDI and that's a problem. It's not just a matter of level. Italy is more in need of it because productivity is lagging behind, and productivity is lagging behind because capital is being misallocated, goes to the wrong places, goes to the wrong sector, goes to the wrong firms, okay? So typically, there is a lot of hysteresis in investment. So people tend to stick where they are. or keep on investing on what they do. So you need something to break the system. If you're looking for additional investment, okay, what has happened in the Italian economy? And that's the reason why, by the way, I think competition concerns are further down the line. So let me give you a couple of numbers here. When the global financial crisis started, Italy was a country that, technically speaking, was investing something around 21% of GDP. Now, I talk about investment not in the way that a macroeconomist talks about it. Okay, so it's not about financial flows. Capital investment for me is stuff, is machinery, buildings, is real productive capacity, things that you can put to work. Okay, so capital, what you study as capital in a productive economy. When you do the production function, that's the capital I'm talking about. So that was 21%. The sovereign debt crisis came. We went all the way down from 21% to 16% of GDP. So you have a big size problem. So you have now two problems: the misallocation and the size of investment coming down. 5% of GDP lost on a yearly basis, and then keep on rolling. 2014, 2015, 2016. Every year you invest 5% less. I mean, you understand how much of a drag you accumulate over time, right? So you have to ask yourself, okay, what are these? Why people are not investing enough, or are investing much less than what they used to be? What are they worried about? What is their number one concern? And investors are not different from the way we all are. What is that you want? What is that I want? Well, I'm a simple-minded guy. I just don't, number one rule, I don't want to be bothered. You don't want to be bothered. You want to do your thing. You want not to be bothered when you do your things. So you need that kind of predictability moving forward, which is especially important for anyone when we plan our life. For an investor, it's quintessential because you're subject to the, what you study as the hold-up problem, right? I come in, I invest, and then I'm stuck. If things don't work, I am stuck. And I know that, I understand that ex ante. So ex ante, I want that kind of predictability. And of course, at this point of the year comes the time where we started talking about the condition that put in place that predictability. And what are these conditions? Well, and we will talk about structural reforms and improvements that are going on, and which structural reforms are more important than others. It was rightly pointed out before that possibly the number one issue when you think about Italy is the judicial system. But the truth is that all that stuff takes time. It's not that it doesn't matter. It just takes a lot of time. In fact, here we are talking about, well, you see things are moving in the right direction, but you need a sense of, this is stuff that you have to do. It's a necessary condition, okay? And what I'm bringing your attention on, I'm just saying it's unfortunately not a sufficient condition to revert that lack of investment that the country needs to, that gap that the country needs to fill with extreme degree of urgency, because demography is not getting any better. You're going to hear a lot from my beloved former colleague, Professor Fornero, later, who's going to tell you terrible things, among others, about the demographic imbalance and a country where I'm sure you've all read this thing that where it's the wrong statistics. I'm going to tell you in a minute, right? Where there is one worker per pension benefit in Italy, and the number of pension benefits have for the first time overtaken workers. It's a bit misleading because some people get more than 2 pension benefits, so there are still more workers than retired people. But you see where the trend is going, right? So Italy has this urgency to actually convey investment, and then you have to ask yourself, what? Which is the upside, so that at least you're not the only one giving a bit of a constructive tone. Actually, I have to say everyone did. Actually, everyone ended up on a constructive tone. But there is something right now that is an opportunity that the country hasn't had for quite some time. Certainly not when Elsa was in government. Certainly not when I was in government. And it's this thing now that for the first time, by accident, by will, a combination of factors, possibly by a crisis, we have an amount of resources, fiscal support directed toward investment, broadly defined. But we can talk about how effective they become. That's going to be possibly the interesting bit to discuss how you make that effective. But you now are facing a country that for a foreseeable future, the next at least 4 to 5 years, has 2% of GDP of fiscal support coming in every year for 5 years. So you remember the 5% of GDP is what we missed. Now, most of that gap, thank God, has been covered. We're still missing 2% of GDP in terms of aggregate investment in the Italian economy. And now the Italian economy has, maybe with the energy crisis a bit behind us, maybe things don't get too much out of control. We have 2% of fiscal support targeting investment that is there to accommodate this spree that the country has been missing for quite some time. Does an opportunity deliver a result? No, it doesn't. But until pre-COVID, we did not even have that opportunity. So it is a change in the landscape that is extremely important. So just to give you a sense about the number here, because numbers are important. So we're still missing, if you look at the general statistics of the Italian economy, our general investment is still now between 18 and 19% of GDP. So still below that 21% we had before GFC. GFC is almost 15 years ago. So the country has lost, by and large, 15 years of underinvestment, misallocation, underinvestment. It's powerful, okay? Any country would suffer a tremendous amount for something like this. But now, you're still missing that 2%. You have that 2% of funding that's coming your way. And, differently from the US, and this is actually very interesting, this funding for capital investment is spread across sectors. There's a lot of emphasis on energy, the green transition, but there are a lot of sectors moving in and out. So now the real question to me is, once the typical Italian excuse that is, oh, I'm sorry, we have a lot of great ideas, but we don't have the funding, is taken away, is taken off the table, or it's made a lot less, how can I say, compelling, then whether we can move, we can actually seize the opportunity that the country hasn't had for ever in my generation, essentially. Certainly, and ever in your generation, not all of you, but for most of you, for sure. So I think that's really the opportunity worth seizing. And to your point, we saw that I don't go entirely ballistic and tangential on now. The problem here is a problem of size. It is just size. And why you need size? Because I'm sorry, if your problem is productivity, you need innovation. And the innovator are big to begin with. So the question really is here not whether competition is not a problem. The problem is how you spread the innovation once it happens. But we are one step before that. We are the step where the innovation is still missing, which doesn't mean that we don't have a great anecdote and instances of success and productivity in Italy. Just a matter of that is not wide enough, not widespread enough. Any measure of productivity you take, any metric you take, Italy is the laggard. Is the laggard in the EMU4, is the laggard in the Eurozone. This is a problem, and this is what essentially needs to be fixed.
Thank you, Filippo. I'm sure there are reactions already from Fabio and Mauro, but I will try to merge my two questions that I had in order to also give an opportunity to the audience to ask questions, and also to Umberto to ask a question about this misallocation rather than funding and capital, but of talent. So in the conversations we were having, beforehand, you were often making the comparison with France, right? How, in a way, it's true Italy has been managing to attract a lot of funds over the last decades. There are positive signs, but still we are lagging behind. And also, if we look at the amount of FDI, among other things, we are pretty much very small compared to what is happening instead in France. And so my following question is, do you see that there has been this positive development, and can you help us a bit put it into context? And merging the other question, what is the role, going back to the effectiveness, what is the role that the government should help in trying to encourage this investment from continuing to happening, both from your previous experience or your current experience in a way, and looking forward.
You want to talk about France?
Yeah, we can. If you want to get depressed, yes.
As you wish.
Yeah, no, I think, listen, the comparison with France is one of the, let's say, weak spot in every conversation I have with my colleagues that run other funds in Europe, because I believe coming back to what we discussed before, and scalability, matters, because if you're bigger, you can make bigger investments, and if you can make bigger investments and continue innovate, you will not lose your competitive advantage, and so on. It's a circular, positivity. When you look at the following industry: fashion, food, aerospace, finance. I stop here because these are industry I know well, because I also invest. I mean, finance I'm part of, and the other ones I invest on. One of the first transactions I actually worked on when I was at BC Partners was the sale of Galbani to a French group called Lactalis. So Galbani was was owned by a French company before called Danone. Then we bought it from them, which was in a terrible state. We actually restructured it and made it very successful, thanks to a fantastic CEO. And then we sold it back to Lactalis. But we didn't sell it back to Lactalis because we were, having fun and selling back to a French company. There was nobody in Italy with the balance sheet able to buy Galbani. And, it's public. We sold it for 2.1 billion. So it's not like 30 billion. I mean, it's 2 billion. But there was no Italian private equity fund able to do an investment like that. Just to give you an idea, at that point, it was 2005, the largest Italian fund was called Investitori Associati, at 700 million in total. And when you have a fund, you need to divide it by 10. Otherwise, your professor from finance come and chase you, and remove your license of being a financier. So it's 70 million ticket. So you understand, to buy a 2 billion company, the banks might give you 400, 700, 800, maybe 1 billion at the time, because they were very brave. But you need 1 billion of equity, You need 1 billion of equity. So to have 1 billion of equity, you need to have a 10 billion fund. Non-existent. Even today, 18 years after, there is nobody with a 10 billion fund. So to say that we always go back to scalability. But then the question is why we don't scale industries. First of all, there's a problem on the banking system, meaning when Lactalis came, we were launching an auction to sell Galbani at the time. And Lactalis came before the auction and said in 1 week, they would have done the whole due diligence and paid the price if we didn't launch the auction. That was the agreement. So we said, well, how can you find the money in a week? Because, you also need banks. So no worry. We have the French banks that in every acquisition, they give us a bridge. And then we have 6 months to do all the due diligence to make them happy. So to say that if you have banks which are brave enough to back entrepreneurs and market leaders and help them consolidating, of course, sometimes you take some risks, but we always go back to the same old rule: no risk, no return. And I think if you look at what happened with Mr. Arnault in luxury, if you look at aerospace, the banking system, and in general, also the institutions around these entrepreneurs have really, let's say, made a good circle of trust and support for these people to go around the world and make it. I close with this other, I think, data, which coming to my sector, it's very relevant. There is a very successful new asset manager in France, which was set up around 8-9 years before us, called Tikeo. Okay, very, very successful. Today they manage 30 billion, up to 10 billion. Actually, even before, up to 5 billion, 90% of their investors were French. Banks, Caisse de Dépôt, insurances, families. Everybody choose that, these guys were successful. They saw them 3, 4, 5, 6, 7 years, said, okay, we go all in. This will be one of the consolidators. I'm Italian. I launched an asset manager, and up to 2 billion, which is what I was last year, 20% of my capital are Italian. I have some, institution from Australia doing the same job of institutions that are in Italy, which are not still my investors. Why? Not because they don't like me. I have very good relationship with all of them, but some of these institutions don't even have allocations to more innovative products like the one, for instance, that we do. So to understand also the problem of scalability, it's useful to always go back and back and back on where everything starts. And one of the problems that we were discussing before with our former minister, it's also linked to education, because we have a massive financial education issue in Italy. Now, even if institutions are not brave, we have a lot of family money. We are actually one of the best saving, jackpots in Europe. And in fact, there are great private banking businesses in Italy, Azimut, Fideuram, tens of billions of money. The problem is this money get all invested on public equity and real estate. But that's not where you really push growth. It's not the stuff, the stuff, the machinery, a restaurant, an hotel, a bridge, it's not going to finance that. Why? Because they're scared. Because if you don't know, a company goes out and said, I want to issue a bond of 30 million to finance a new plant. A bond, we were saying before, 7 people out of 10 don't know what is a bond in Italy. That's a big problem. So I think one also of the real brave thing we need to do, if we want to look at Italy in the next 30 years, not in the next 5, is going and work on really the ingredients that make the cake, and not just to try to understand how we can fix the cake with a bit of more stuff on top. But that's brave. And that also needs, coming back to government, I wouldn't say 10 years, but at least 5 of one single government. Because in order to implement some of these strategic decisions, you need to have a management in place for at least 5 years, like in a company would happen.
Thank you.
I would say 99% agree with
Yeah, good.
So I tried just to connect to one point you rightly mentioned. Just say, you mentioned before Lactalis.
Yeah.
Okay, so it was the time CEO of the bank, and Lactalis in the end bought Parmalat after the failure, and at that time he had 1 billion net cash, and the financial system was there to support Italian buyers. I was running a subsidiary of what is today, and even at that time, the largest European banks, which used to be BNP Paribas, used to be close to Benin. And we decided to, let's say, favor Italian exposure to this. So I said this signal to whoever, and also to some other colleagues about Italian banks, we are here to help an Italian company buying out Parma, which, by the way, would have had 1 billion in cash. So thank you. You just take it out and say, no, 1 billion less of financial products. We didn't find a buyer. So I just want, this is the 1%. Clearly, financial systems, we know what I mentioned before, the French system. They have a system. There's a close.
But there was no buyer at the time because there was nobody big enough.
But what we're talking about a few years later, I don't like to mention names, but there was some companies who could have definitely done it. So I go back also to the mentality of entrepreneurs. I totally share what he said before. We have geniuses. What is, to me, the next challenge, probably for the next generations of entrepreneurs, those who decide to either to create new companies or to keep the heritage from their fathers or grandfathers and stick to it, is thinking bigger. I just give you a few examples. I heard that with my pronounced ears, a couple of super well-known fashion brands in Italy, when talking about hiring a new CEO, saying, we cannot afford that guy. So we talk about large businesses because of innovation. Let's talk about large businesses because of talents, because they can pay more. It's a different order of magnitude in certain sectors. And we need larger companies. We have fantastic companies, but if you put a value on our largest food company, which is Ferrero, just watch at the market value of Nestlé. So we have fantastic companies, but when it comes after a certain, to go beyond a certain roof, which is a kind of culture, it's hard to find entrepreneurs who goes beyond that. One name above all, Luxottica, Essilor, 80 billion market cap in an industrial business, clearly linked to luxury, but and med and clearly tech, kind of now med tech. But just compare all our other companies to their corresponding in France. You mentioned defense, that's another example. I don't know if you just watch at the multiples of market cap between our Italian champions and the French champions. It goes on everywhere. So I think it's not just financial system, it's also a culture. Just like you mentioned before, for different reasons, we insult somebody saying you are a falit. Is an insulting adjective. It's never used everywhere else. So I agree, this is all sorts of unfortunate stuff. So dimension is important. And I wanted to say that the financial system is a capital markets. For US entrepreneurs, going public is a matter of pride. And to us, no, I don't want to lose 100%. I don't want somebody to say my accounts, or 51%, have to keep my 51%. So, and that clearly limits the threshold. And there's one day with my economist, we made an exercise and tried to estimate kind of exclusion of the R&D of the large German companies and try to compare those figures with ours, because they have huge companies in Germany. And that number of R&D on GDP was much closer to Italian levels. That is what we were saying before, scalability, large companies can invest much more. So we really need large companies. And they do not grow by naturally, by the spirit. You have to have somebody doing that who is able to accept dilution. No public will need it to open the capital of a wise long-term thinker. And Mauro definitely one of those. Not all of them are like you, if I may. So, but I mean, that is a cultural transformation that we need to face. That could help probably one thing. If you look, for example, at Canada, they put in place pension fund reforms in the early 90s, which today, as a consequence, I would say as a result, they have probably the most sophisticated pension fund investors in the world. And they have a predictability of flows. They know they can invest in equity and no longer purely in Canada. They can invest abroad because they know that every year they have dozens of billions coming over. So they can hire the best people. They pay the people.
They pay 6-7 times
they pay
the pension plan plans in Italy.
To our culture, and we want to have a long-term investment. We have some regulations. We have the governance issue, and we have also the ability to attract and then retain funds. But we're talking about if you go to talk to whoever pension fund, whichever pension funds in Canada, we just like going to talk to Blackstone Group. It's not going to some bureaucratic organization somewhere. So I think again, we should probably need something to spur and having these great player in terms of investment. Otherwise, even who's going to give money to venture capitalists? It's the riskiest asset class. Who's going to do that? Banks cannot lend by definition. Then remember, we also have regulation. Basel 2, 3, 3.5, and whatever. So to me, the key is to remain agile. Small is beautiful, used to be true 30 years ago. Now we need to keep entrepreneurs who really stick to their long-term view, passionate about that, but who can have the ability to grow, if necessary, to go public, if necessary, going below 50% and be influential in larger companies. Just one word on the recovery plan or PNRR. You're right. I agree. It's a once in a generation. It's not once in the 2 generations opportunity. It's the delivery which what concerns, because now we have all this. We have no longer allies. So we can say the king is naked. So we have to deliver, and we have to do that with a constitutional system, which is not easy. We have this the famous referendum of 16 for more power to central state in certain matters. Didn't turn out well. So we have some also constitutional issues, and I think it's very important that we no longer have alibis. We have to be able to deliver. One thing is just present the projects. Another story is to deliver. We have problems with finding workers. We have problems finding skilled workers in many industries. I'm saying this because I talk to entrepreneurs every day. And in many cases, we need, and I just give you an example I mentioned before, the ratio of proposed project for wind and solar fields and the approval rate, it's unbelievable. So again, it is not something we have to find beneath the surface. Nowadays, we have these clean energies, it's wind and solar, but we have to have a better bureaucratic energy. Otherwise, those clean energy will remain.
Filippo, last word to you in this round, if you want. You have dealt with the government machinery, you know, in part where the bottlenecks in a way lie. You were saying earlier, though, that, you know, the reforms that were mentioned at the beginning are needed, but they take a lot of time. So how do we make this change also in culture in a way more effective? Because you used the word effectiveness here. And then I grouped the questions from the audience, if you.
Okay, I'll be super quick. I'll try to be super quick. I don't know whether I will succeed. So 2 points to this. Okay. Number one, what's the number one factor to watch in this once in a generation opportunity that we get now? You want more investment, you want more capital, you have to let people fail, go bankrupt. Okay, so we know we have the fiscal capacity. What is the red flag here? What is the kind of the things that should catch up your attention to say, okay, maybe things are not going the way they're supposed to? It's not only that, you know, the delivery is low, but it's also that the fiscal support, the amount of resources that we talked about while we wait for the structural reform to kick in, fit in, and produce their long-lasting effect on culture, on the economy, is that the fiscal support doesn't go to reward new things, but that actually to patch, repair what's broken. We've done that in the past. This is the number one reason for misallocation of capital that we talked about. If you want larger firms, larger company, you have to, you know, I'm going to be a bit brutal here. You have to allow the less productive to fade away. If you support everyone in the same way, sorry, it's not going to work. So number one issue is we have a lot of fiscal firepower and the temptation will be there. The temptation, make no mistake. I mean, we've all been policymaker. People come to you with terrible story. I mean, with workers running the risk of losing their jobs, things not going the way they're supposed to. And you know, that demand is totally fair. Just that the right way to address that demand is not to protect a job that has no future, but rather to offer the opportunity for jobs that have a future. So allow for incentive to investment rather than reparation for the vast sector of the Italian economy that have suffered a pretty big toll because of the crisis, number one. And number two, and I'm sorry, this is just the second red flag here, make no mistake, money is not just for us. It's not just for the Italian economy. Money is for everyone. The Recovery Fund is a European program. We talked about Spain before. Well, Spain is the number one beneficiary with Italy of this fiscal support. So if you make a mistake now, it's going to be double, it's going to have a double effect. It's not just that you're losing, but at the same time, if another country actually uses that money better, fosters more investment, then, you know, I mean, capital are going to move. Capital are going to reallocate from one place into the next. And, you know, look, in my job, I also cover Spain. So it's not that I have a preference for one country or the other. Okay, it's like I'm very happy if the success is shared. I'm a bit concerned if the success is asymmetric. So then that's the risk, honestly, to me. But the risk of that. So now, the risk of failing, as systemically as a country, is twice as important as this typically is, because others have an opportunity as well.
Thank you very much. Umberto, if you agree, I take the questions from the phone and we have yours.
I prefer that.
So I know that there is a question in the second row. If you just wait for the microphone, because they're streaming it, so they need it.
Thank you. I had a question about the next generation EU plan, which is already been covered. But I would like to ask from your perspective, so from the perspective of the private sector, do you already see some changes due to the next generation EU plan or not? And do you think that it could be have a multiplier effect on investment, on private investments? Because we know that the plan is European, so it's public funding. Yes, Maria Rita Circi, Bank of Italy.
Thank you. Then we have another question there. Then you tell me which ones you want to take.
Yeah. Are you sure? Okay. Good evening.
Hi.
Are you sure you don't want to answer her question
No,
first?
we are going to collect because we
okay.
are.
Because mine is very small, but a little bit
Go ahead.
complex. So first of all, Sonny Ojaga, I'm an international trade and investment advisor specializing in emerging markets. So brilliant presentation. I love it. Quite enlightening. I would like to jump on what Mr. Fabio said regarding what does it take to attract FDI. So he mentioned natural resources, he mentions economy, market dynamics. So I'd like to ask, how do you foresee the future of FDI in Italy amid the current geopolitical issues? We've seen obvious acceleration of multipolarization. We combine with de-dollarization, ongoing de-dollarization of the world. We see a parallel market coming up, with the BRICS. We see a lot of problems around the world. And all this, it's gradually leading to a market shift, like the market shifting away from fiat currencies, almost in replacement of emerging markets, gold or commodities backed currency. So what that means is that, for example, if you look at investors, and these are something that I have observed in the past 3 years, and it's actually accelerating, that you have like a foreign direct investors around the world, be it institutionals or private, they are investing massively in emerging economies, particularly in Africa. It's something that we've seen going exponentially because they're more concerned about next generation. I mean, in the coming years, the countries, the emerging economies, because they are backed with natural resources in abundance. So whatever currency they have, maybe they just have to back it with the currency, their commodities or the gold that they have. So we've seen that. I would like to know how do you foresee FDI in Italy with all these geopolitical issues and shifts? And the last question, this one is very short, is, no, this is very important. Last question is very short. We know Italy is part of the European Union, and then we have euro as a currency. Are you not concerned that on the long run, with what is going on with all this geopolitical thing, euro and the US dollar suffering from all this de-dollarization, including euro, even the British pound. So aren't you concerned that maybe Italy may have to go back to their currency because the euro is kind of like a very, very big, massive currency, and then you have disparities in European economies. for you to be more attractive to for foreign direct investors. Sorry, it's a little bit long, but it's complex stories around the world.
Thank you very much.
Thank you.
Well, my friend, if these are your small questions, I'm ready to hear the big ones.
Sorry.
Let's start with Filippo. Do you mind if you want to take this? Because then I don't know if Umberto has one last question. Sorry.
Yeah,
well, Umberto has got one last
So I
question
can
on top.
connect it back. I think one opportunity that was similar to the recovery plan could have been the Marshall Plan. In a sense, in the 1960s, I've watched a lot of lectures with Professor Fornero. She was explaining in the 1960s, the Italian demography looked like a pyramid, right? And there were many young people that with the Marshall Plan enhanced the Made in Italy outside of Italy. How can we use the recovery plan to create a certain situation that then we could argue could produce the Italian miracle until the 1980s? How can we invest into the talents that we have? Because I keep seeing them, I keep meeting many people that are actually here, that have founded a startup here. How can we invest in the next generation in a proper way such that we can create a similar economic condition? The only difference is, of course, the demographic situation. Of course.
Sure. So we do one last round of comments, starting from Filippo, if you agree.
I'll be super quick. So on the recovery fund, you say, have we seen much? Well, we haven't, but we've been unlucky to some extent. The energy crisis last year took away a lot of momentum. If you look at how much money has been spent in Italy, it was 5 billion in 21, around 15 in 22. Altogether, it's 20 billion, is 1% of GDP. The good part of the story is that there is 10% of GDP to follow, a bit less, but let's say 10% of GDP to follow. So the majority of the firepower is there. It's all right if we haven't seen much until now. I mean, obviously, we would have hoped for the better, but the best part has to come. And on to the second point, how can we make this more effective? I mean, there's a lot of discussion going on right now in Europe, and the next EU Council on March 23 and 24 will be especially important to make that distinction. But the issue is the following in a nutshell, right? You can go the traditional way or the Danish way, I'm going to call it. The Danish, not because of the Sweden, the Danish because of Denmark, okay? So Denmark decided to do this, and they haven't done much, but at least they had a smart idea. Everybody else built a recovery fund around public investment, which is great, but it takes a little bit of time to fit in. The Danish has come in and say, hey, hold on a second. You know what? We can use this money actually to provide, it's very much like the US policy, like the Inflation Reduction Act, to provide an investment tax credit. So you come, invest money down. Of course, it's not that you can come and invest anything you want, but you invest in some crucial technology, habilitating technology, sectors, company, the things that the gentlemen here have been talking about, and you get immediate support for that. So you actually use the opportunity for to trigger a private investment versus public investment. Of course, there's a trade-off there, but at least you have actionability, you have movement, you have pace, you have pickup, you respond. And look, the Marshall Plan was a great thing, but thank God it's not that you needed to rebuild the country here, okay? We're in a better, we're struggling, okay? But we are in a better position than where we were when we were implementing the Marshall Plan.
Thank you very much. Mauro.
No, I think on the let's say next gen plan and what the PNR will deploy in the coming years, I actually see already several entrepreneurs and management teams trying to project where they can go and get the capital and basically rebase or spin off a part of their businesses in order to be ready to do that. Very recently, for example, I met a management team of a big construction business in Italy. They were thinking to actually spin off their service, which basically does the maintenance to the infrastructure, because they believe that thanks to the capital coming, they could actually become a high growth business in the spin-off. And they said, if then we capture the volumes, maybe in 4 or 5 years we IPO and we raise more capital. So I can see that it's in the agenda of most people. Obviously, one of the problem we have in Italy, there are not many companies specialized in, call it finanza agevolata. So very few banks do this service. With my actually charity, I have supported one local entrepreneur with MBAs and he actually set up a business dedicated to that in Central Italy, and he has 7 people. He's the largest in my region. You know, we are 1 million people. We are not big, but still, if you are with 7 people, the largest. So lack of professionals specialized in helping entrepreneurs and management team to understand how they can actually get the money. I think it's one of the problem. But entrepreneurs are there ready to catch the money. And then around the euro, let's say currency risk, I think that would be a big mistake. I think that especially with our let's say frequency of government, I think we will struggle to find someone brave enough to do something like that. Because to do something like that, you need to have big strategies. And you need to be very brave, and people is always worried to lose consensus if they do very bold moves. So I don't think it's going to happen. It's a good news, I think.
Thank you very much. Fabio, your last word.
You know, I agree. I see it. I don't really wish we turn back to lira. Let's keep lira as an instrument. But that's fine. We're fine with euro. And let's not forget that also thanks to all the constraints we got for the companies being inside the euro without the so-called competitive devaluation. Basically, companies have been forced to be more competitive themselves, just counting on their own actions, managerial and entrepreneurial actions. So to me, I find it's something more of a nightmare rather than a kind of dream. I would just highlight another point: speed of execution. Inflation Reduction Act in the US is attracting a lot of European money. Why that? Because that money is easily and quickly available. So I go again, to me, one of the, if I could have a magic stick, I would try to simplify our country, which is even to finish on a positive tone, is the most fantastic country. We have a tremendous amount of entrepreneurship, of genius, ingenuity. It's fantastic. Sometimes the system does not help. And this creates alibis to become more and more individualistic. We're not good. We're not effective in playing as a system. Right? Probably the 3 of us could tell you constantly, and that's a pity. So I'm really longing for once to meet 2 generations opportunity, in which, by the way, also Europe behave much better. To me, it used to make 1 step ahead and 2 steps back. 1 forward. Now we're making 2 steps forward, 1 step back. It's still 3 steps, but at least the direction has changed, and we are in the right direction now. So I really think that we have to capture this chance, because our debt to GDP does not allow for any failure. Because if we don't grow, going back to what Filippo was saying, we're not just like Spain or Germany. Let's put it. We have a burden on your generation's shoulders. It's unprecedented. So we really are doomed to success. So let's be positive. It's in best in the worst environment, we do our best. I think we should all be aware that the stuff we don't really have to waste these opportunities.
And I think moments like this where we discuss about this, it's already an encouraging thing. So thanks for
Thank you.
organizing.
Thank you.
Because it was great.
Thank you.